Compliments of the new season. Happy New Year, guys. I hope you are encouraged. I hope you are positive. I hope you are full of faith and really, really, most importantly, looking forward to your best year yet. And I think whenever I think about what it means to believe for your best year yet, I'm not obviously expecting that it is going to be a year where everything is going to inspire praise and it's going to inspire a well done, but it's understanding that whatever happens, whatever the experience is, good or bad, positive or negative, all things work together for my good. If you're new here, welcome. If you're a returning subscriber, thank you so much for your continued support. And again, if you're new, I hope you fall in love and you stay. My name is Tendrito and I am your financial coach. And on this episode, the very first episode of 2024, we will be talking about, I think, the step that for most of us, we sort of did it last year, but if you haven't, it's not too late. It's the step that comes before the thing that we are all doing and the thing that we are all hopefully excited to do, which is goal setting, vision boarding, and having our 5-year or 10-year plans. Great exercises to do. But I think most importantly is to take a step back and ask yourself critical questions around where you are currently, right? If, for instance, you have already chosen, I think we all sort of have an idea of the areas that we want to improve, and studies show that it's actually better to set aside maybe not too many things that you want to do, maybe 3 or 5. And I know for most people, top 3, finances will always be topical. Finances will always be the area that people want to work with, right? So let's just assume that you have already decided that finances is something that you are going to focus on this year, or focus on elevating this year, or focus on improving and working on this year. It's important for you and I to take it a step back and first and foremost understand where we are with our finances to date, right? So what is our current location when it comes to our finances, right? So if we think about it practically, right, outside of the goal buckets that we are all sort of setting and looking forward to, right? If you envision that you want to go somewhere, right, and you sort of want to plot it on, let's make an example with Google Maps, because this is a Google app, and you put in the location where you want to go, the destination where you want to go, right? There is no way that Google is going to map out a route for you to get to where you want to go or to get to your destination if Google does not know your current location, if you do not input where you are currently. So similarly, right, in the things that we are wanting to achieve, at the end of 2024, in the things that we are wanting to in the dreams that we are wanting to realize this year, it's important for you to first and foremost understand where you are. And on this episode, I'm going to help you think through, right, how to locate your current location before we even start talking about the things that we want to achieve in 2024. To begin, let's start right on top of our budgeting template, and I will do a budgeting tutorial. I did a budgeting tutorial a few years ago, but I think I want to do a revised one. So anyway, back to our income, right? So on the top of our budgeting template, we have our income category. And this is where we are going to do our first review. We're going to review our income streams, and we are also going to review the type of income streams that we are currently earning. I think at the back of our heads, we all have, these wonderful expectations and dreams, and really sometimes even unrealistic, because we're actually not doing anything to get there. Which is to, be billionaires one day, and noble, wonderful, excellent. You have a right to have such dreams. But again, for purposes of today, we're not going to dream as yet. We're not going to set our expectations on the high as yet. We're first and foremost going to locate where we are. Where am I? So if I am a student and I have side hustles and I maybe belong to a scholarship program, I probably receive a stipend, I probably receive income from my parents, well, pocket money from my parents. So you want to write that down as your income because that is income. If you are employed, right, your salary is your income. If you are in business, right, whatever it is that you invoice for, that forms part of your income. And once you've written out, the types of income that you receive, I want you to do another exercise. And this exercise is going to require you to ask yourself what the sources of your income are. So active income and passive income. So let's break down what it looks like to earn active income. So when we earn active income, that means, again, like I said, we are actively doing something on a daily basis in order for us to earn this income or to make this money. So if you are employed, as an example, if you don't rock up at work from 9 to 5, you are not going to earn an income. If I bring it back home to the business that I run, if I don't set up one-on-one coaching sessions, if I don't do group master classes and workshops online, etc., there is no way that at the end of the day or at the end of the month or at the end of the week, I can send out an invoice. So in order for me to earn an income, I need to be active. So that is active income. So look at the pool of the type of income that you receive and ask yourself, is this active income or is this passive income? Now let's go to passive income and try and unpack what that looks like. So passive income, you're earning an income in my sleep without having to sweat, without having to do anything, right? And by definition, that is what passive income looks like, right? But when I thought about the examples that I'm going to use on today's episode, right, I realized that in the main, right, for most of this passive income that we all want to somewhat earn, there is an initial investment where you have to actively participate in an activity for a long period of time or an extended period of time until you arrive at the place where you are able to earn in your sleep, right? Let's make an example with authors, right? Or someone who is, curating, let's say, an online course, or a singer, an artist, right? So with these people, right, the initial investment is obviously, sitting in studio and recording this content for this online course that I want to eventually produce, or having quiet time and writing time, thinking time as I am authoring this book, or an extended period of time where I am, becoming creative and writing songs and lyrics, etc., right, and coming up with beats and stuff like that. That's a lot of money. But once the product is produced and it's sitting on the shelf, right, now I can rest. Now I can rest and start, enjoying the benefits of having done the initial investment that I put in, or rather the initial work that I put in towards making sure that I can now earn passively. So to sum all of this up, what I'm basically saying is map out all your earnings, right? So salary, I earn dividends, I earn interest here and there, I run a business, so there's a fee that comes from that. I am on YouTube and my YouTube is fortunately monetized, so I receive income there. So write all of those income streams down, but also next to them, just write down the source of the income. Is it going to require you to be actively involved in earning this money? Or is it something that is passive income? Or is it something that actually has potential to be passive income? Because I think eventually, without sounding like I don't want us to actively work to earn an income, eventually you want to get to a place where your money has really worked for you. And the next area we're going to look at is debt, right? Understanding my current location where debt is concerned. One of the topical and top financial goals for most people is getting out of debt, so debt free, right? I see this a lot whenever I have coaching sessions. Like probably, if I was to do an estimate, probably about 80% of the people that I coach, we are basically working on either them becoming debt free or them reducing their debt to an acceptable level, right? So if you are in debt, it's important in order for you to get to 2024 and say, this is one of the 100 things that made my year. You need to first and foremost understand where you are currently located, what your current debt landscape looks like, and then we can talk about dreaming, and then we can talk about the habits and the tools that you need to get you to the end of 2024 having realized your goal and having realized your dream. So what does it mean to understand, your debt landscape? Very simple exercise, guys. Very, very simple. And I know simple things are actually simple not to do. And I know because it's a very personal, and I know in most cases a very shameful thing. Debt is tough, right? It's tough for all of us to look at our finances. It's tough for most of us to look at our finances head on and say, yeah, this is me, right? Because it actually just gives you, a view of your behavior in the past, right? But if really this is a compelling vision for you, if really this is something that you really want to achieve, you want to come face to face with it. And what does this look like? You're going to sit down and write down your creditors, the people that you owe currently. Do I have, for instance, a Woolworths account, right? I had a Woolworths clothing account, so that's why I'm mentioning it right at the top, right? So again, you write it down. Do you have personal loans? Or I have 5 credit cards. Yeah, I know. People actually have 5 credit cards. Do I have an overdraft facility? Do I have personal loans? Do I have a student loan, right? Do I owe Malume? Do I owe Mane? Do I owe my sister? So you are writing all of these dates down so that, guys, when we are anticipating where we are going, we are understanding where we are starting from. And once we have written it down, right, we want to understand how much I actually owe. Guys, it's not enough for you and I to understand our debt through the lens of minimum payment that we have to pay at the end of the month that we see on our bank statement. It's important for you to know the minimum payment that you have to service this debt, but even more important, it's for you to know how much the outstanding debt is, which is something that you can access obviously on your statement. So if you have a clothing account with a retailer, for instance, on that statement, it will tell you how much your outstanding balance is. Also, obviously, your minimum payment, which you will always see, obviously, on your bank statement. So it's very important to understand what my outstanding balance is as well as what my minimum payment is before we even start dreaming and having wishful expectations that we are going to do what? We are going to be debt free. We first and foremost need to write the vision down, understand where I am when it comes to my debt landscape. And if you really, really want to start working and smashing the debt, I do have videos that I will flag that I did a few years ago. Same principles, I might do another one, a revised one, but again, same principles. If you want to start as soon as now, as soon as today, you can access those videos and they will give you tools and techniques around snowball methods and avalanche methods. And there's actually even a calculator that can tell you that if you continue paying your debt the way you are, for instance, if you continue servicing your debt by minimum payment, you are actually going to get out of debt in 2050, right? And I know whenever my clients see that date, that date freedom date, they always freak out and they say, no, not on my watch, not me. I am not getting out of debt in 2045. I'm getting out of debt in the next, say, 5 years or in the next 3 years and stuff. And I think it's an important exercise to do because it just raises your awareness to move from, I just high level picture, want to be out of debt, to I want to be out of debt by this round number. So I have a debt summing up to 150,000, just as an example, versus I am going to be debt free. Debt free, how much is the debt? Do you understand what I'm saying? So yeah, that's where I want you to be, where your debt is concerned and where your current location is concerned. So the next area that I want us to get a sense of where our current location is our savings and our investment landscape, right? So let's start off with the savings category, right? And emergency fund falls under that because it's short term in nature, right? And whenever I think about emergency funds, guys, right, if there was a ladder or a list of priorities where our personal financial planning is concerned, budgeting is number one. Number two is having an emergency fund. And I think probably the reason why it's like that for us is because I have had instances where I have lost my income, right? Understand what those closing balances are, review your goals. Why do you even have an ETF? Why do you even have a unit trust here and there, right? Review all of that and write down the closing balances for these investments. Do you have something for your child or for your children if you are, or if you do have children, right? Again, ask yourself questions. Should I be having more things, or like where am I where putting money aside for my children is concerned, and what are those balances? And when I think about these balances and where I want them to be when they reach the age of majority, is the maths matching? All right, and last but not least, it's insurance, right? Let's start off with life cover. And with this one, guys, I think a simple matrix to use is if you've got debt, like big debt, like I mean serious debt, like a car or a house. I don't want to get into the detail of how that debt should be, but if you've got big debt, and very important, you've got dependents. So if you were to drop debt today, someone would be stranded. Someone who has been relying on you financially would be stranded. So I want you to assess that landscape and ask yourself, do I have debt or do I have dependents, right? And if the answer is yes, you need to have a life cover, right? If you don't already have a life cover, you need to get one, right? But if you already do, I want you to do a review exercise again and ask yourself, if I look at the cover amount, does it still speak to the person that I am financially today, right? Have I updated it as life events have sort of evolved? I got married, for instance, so now I have a spouse. So naturally, that cover amount should change. I now have a child, or I now have a third child, right? We have now purchased a property, or we've now purchased a house. So stuff like that. So as life events sort of change, you also want to make sure that you are assessing that the cover amount is speaking to your the way, or rather the manner in which your life is evolving, right? So you want to make sure that those cover amounts make sense and they speak to you actually providing for the people that are dependent on you and the debt that may need to be settled if you pass away. Does that make sense? Another important one is funeral cover, especially when you know, right? I think for most of us, we know that, they always say, if you work in overseas or you work in certain, just as an example, and there's a funeral in the home, you are probably going to be called into the room where decisions are being made, because you are seen as an adult, and you're not just seen as an adult, you are seen as a contributing adult. So I want you to assess that landscape and assess, if someone in your family were to pass away, would I be financially responsible? And if that answer is yes, right, I want you to make the effort of paying that small amount, right? It can be as little as £10 or 25 £10 to $25 or £100 towards just putting money aside for your loved ones in case they pass away, so that when they do pass away, guys, we are not having to tap into our emergency funds, into our savings, into our investments, or even worse, going into debt, just so that we can show up at that table as people who actually work in certain, right? So very, very, very important to understand that landscape, review that landscape before we even start mapping out what our financial goals look like for 2024. And guys, if this is your kind of content, please do consider subscribing. Do let me know what your thoughts are on the 4 areas that we have talked about in the comment section, and please do share this with someone in your circle whom will find this helpful and beneficial. Thank you so much. I'll see you next time.